Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And today is Monday, November 17th. And yes, I am back here in South Florida. And here are the things you need to know to get your day started. So what is a Momo trader and why is it important for you to understand? Volatility is back and risk assets, well, they took a hit last week. Fed speak, government data, and concerns over the labor market are now causing some elevated level of anxiety. All eyes this week are on retail and, of course, NVDA on Wednesday after the bell. And what do we have for dinner tonight? We're going to have the Alaskan Black Cod. Oh, my God, so delicious. Anyway, Econ 101, what it means to be a momentum trader, right? Which is also called a Momo trader. Because this is important, since much of the action lately has been defined by what they do. Right. Now imagine you're standing on the beach and you see this huge wave building way out on the horizon. The momentum trader is the guy that's going to run in, grab his surfboard and run right into the wave, right? Not because it's safe, not because it's logical, but because it's moving, right? They live by one simple mantra. It's moving, so I'm going to go with it. They don't care about PE ratios, discounted cash flows, or even the fundamentals. They don't care what strategist thinks or what the Fed may do by Easter. Nope, none of that's important to them. They care about velocity. They care about what's being bought, what's getting sold, and where the action is and where the energy is. See, because most of them are type A's, right? They live for the rush. They don't marry these stocks like invest in them. They date them. Think of like a quickie or a fling, right? They're happy to toss it out and move on to the next one. Fundamentals, don't be ridiculous. Price action, that's the driver. A momentum trader looks for what is creating energy. Now, stocks build energy mostly because the Momo guys are trying to get in or get out, right? It works either way. And then investors pile in, and then the retail trader feels like they're going to miss out, and they pile in. And the move gets exaggerated to the upside, and then once again to the downside. Now, let's take the tech trade. How long have I been screaming about that it's overbought and that traders have taken it to stretch valuations to levels that are really unsustainable for now? How long have I been saying don't chase tech? Now, hold that thought for 1 minute. Okay, so the end of the shutdown came. What exactly happened? Well, it didn't calm things down. It actually created more volatility. And why? Because suddenly we got a parade of Fed heads telling us how they see the world in the next, ahead of the next meeting, right? Which is only 23 days away now. And hint, they weren't very dovish. That was part of the problem. Then the idea of this guaranteed rate cut is no longer guaranteed, although I still think they're going to cut by 25 basis points. But apparently there's some speculation around maybe not, right? About whether they'll even cut at all, right? We have renewed concerns about the labor market. But what's funny about all this? None. None of this is new. Not one of these headlines is new. These risks have always been there. Investors know this. But the Momo guys, they just choose to ignore it, right? They push the indexes straight up. No pause, no pullback. No consolidation until they run out of steam. Now, just to look at the chart. The move is vertical, right? It's straight up. And when they get tired, what do? They sell them when they run out of steam. And when they pierce the trendline supports, then the algos jump in, only putting more pressure on stocks. And this is exactly why I keep telling you to have a plan and stick to it. Don't get dragged into the noise. Investing is a marathon, not a sprint. So you have to avoid the noise as a long-term investor. And by the end of the day on Friday, we saw the Dow lost 310 points. The S&P was down 3. The Nasdaq added 30 points, but that had gotten beaten up earlier in the week. The Russell gained 5. The transports lost 45. The equal-weighted S&P lost 25 points, while the Mag 7 gained 54 points. Again, it had gotten beaten up. Trendline action. The Dow is holding above its short-term trend line. The S&P pierced it. The Nasdaq pierced it. The Russell pierced it. The Russell's actually testing intermediate-term trend line, while the Mag 7 also pierced it. Now, what's interesting to note here is that the equal-weight S&P pierced both the short-term and the intermediate-term trend lines. So that's a flashing yellow light. It tells you that the fast money crowd, the Momo traders, the hedge funds, algos, they're turning more cautious or maybe even negative. The intermediate term break suggests that the bigger, slower, more disciplined money managers, is no longer necessarily supporting that move higher, right? They're being more patient. So in the equal weight S&P, which is the cleaner, right, more honest version of the market, when it breaks both those trend lines, the message is simple: respect the risk. Now, speaking of risk, the VIX, which is the fear index, it shot higher last week. Thus, the pressure on stocks. It ended the week a bit elevated. It was up about 16%. And this morning, the VIX up another 3% as the sun is rising over the Atlantic. And just look at what they did to Bitcoin. They took it down through two trend lines, only to test the long-term trend line. It bounced, and then it tested again, and boom, crash and burn. Bitcoin tumbled lower as the Momo guys and the over-leveraged guys hit the sell button. And bang, just like that, down we go. They took it down 11% last week, taking it down now 26% in 1 month. Ethereum has also taken heat, down 17% in 1 week, and now down 38% since its August high. This morning, Bitcoin's up 2%, and Ethereum is up about 4%. Now, bonds ended the week slightly lower. The TLT lost 0.6, the TLH down 0.4. The 10 years now yielding 4.12%, and the 30 years yielding 4.72. It's kind of been in that range, no big news. Shorter duration 2-year treasuries are yielding 3.59%, and 3-month T-bills are yielding 3.78% on an annualized basis. Think, just under 1% every 3 months. Oil keeps teasing up and down here. Last week, we tested as low as $58.34. This morning, oil is trading at $60.15, leaving us well within that trading range that I defined, 55 to 62. Not really doing anything. There's nothing new to discuss here. Prices are expected to trend a little bit lower until we work through the supply glut that is coming in early 2026. Gold, well, that began the week on a plus tick, right? Trading up 6% by Wednesday, only to turn lower by Friday, falling back 5% as we ended the week at $4,084. This morning, gold is down another $7 and is down 8% off the October high of $43.75. The weakness is a direct result of the idea that the Fed may not cut rates. And that's the case. If that's the case, then guess what the Momo guys are going to do? They're going to hit the sell button. And that's what they did, sending gold lower. Trendline support is now down at $39.50, a level that should find decent support if we get there. Now, it's a big week for retails: Walmart, Target, Lowe's, Home Depot, etc. And these reports are going to give us an inside scoop about the state of consumer spending, which is the main engine, by the way, of the U.S. economy. But let's not forget, it's a big week for tech as well. NVDA is due to report on Wednesday after the bell, and as you can expect, it is a crowded trade. There's lots of Momo guys in here. Now, the options market is pricing in a 90% chance of a substantial beat on the numbers, and they're pricing in a plus or minus 7% move after the announcement. Now, while NVIDIA is up 41% year to date, they took 28% out of it last week. They pierced short-term trendline support, and they tested intermediate trendline support at $178, which held. The stock ended the week at $190, $21 below its all-time high in early November. So this could go either way. It's going to depend on the mood of the day, right? So sit tight. If we're accentuating the positives on Wednesday, boom, we're going higher. If it's a negatives, boom, we're going to go lower. Eco data this week includes Empire manufacturing, construction spending. That's today. Later this week, you're going to get industrial production, capacity utilization, factory orders, durable goods, FOMC minutes on Wednesday. But let's not kid ourselves. Friday brings us the all-important NFP report for September. Yes, September. Remember last week they told us we're not going to probably get October's numbers due to the shutdown. For me, at this point, I don't find any value in this September report. They'll make a big deal about it, but it is what it is. It's already 2 months old. U.S. futures are up this morning. Dow is up 12, SP is up 15, Nasdaq is 100, and the Russell is up 2. European markets, though, are lower. After opening higher, they've all turned south. Some of it is about earnings, and some of it is just about economic concerns. Markets there are down about 0.5% across the board. The S&P closed at 67.34, down 3 points. On Friday morning, right, we tested the short-term support line at 6,700, and we did not hold it. So then we traded down to 66.46. Once we broke it, if the algos get more aggressive, then we see, the algos get more aggressive just to see if the bulls would defend the position, or if they'd step aside to test a level of anxiety. In fact, they stepped aside, and stocks traded lower. Then the buyers stepped in to try to buy stocks at a discount. Now, while futures are up this morning, I remain cautious. Trendline supports again at 6,700. That's key. We've tested it 3 times. We've pierced it twice. We've rallied back. Let's see what happens the next time. The market is betting that NVIDIA is going to save the day. Ask yourself, how dependent is your portfolio on what NVIDIA reports? It's all about risk management. Remember that. As a long-term investor, you want to make sure that you are well diversified and not overweight in necessarily any one sector. Stick to your plan. Remain disciplined. Talk to your advisor if you're concerned, because at this point, patience is always a virtue, especially when the markets get nervous. Now, you can call me at 561-931-0190. Give you a free, no obligation review of your portfolio, because remember, again, it's all about risk management. Let me help you assess the risk of that portfolio versus the risk that you are willing to take. Okay, here's the countdown. Black Friday deals are already happening. 23 days until the FOMC announcement, 38 days until Christmas, and 44 days until the ball drops in Times Square. Okay, so what do we have for dinner tonight? This is such a great fish, and it's hard to get here, right? It's Alaskan Black Cod, right? If you've never had this, you need to try it. Now look, the fish has a rich, buttery taste, and its fatty texture lends itself really to a great dish and a great meal. The problem is I can't get it here, right, on the East Coast. So I order this from a place called Jerry's Meats and Seafood. You can get it at jerrysmeats.com. It's in Juneau, Alaska. It comes to you flash frozen, packed in dry ice. It's now one of the family favorites, right? I've never seen it, like I said, in a local store, so I order it from Jerry. He sends it via UPS overnight. Now, for this, you need the fish. You need some butter, salt, and pepper, fresh lemon juice, dry white wine. You can use chicken stock if you want, and you need capers. You want to set your oven at 400 degrees, right? Bake, right? Put it on 400 degrees, bake. Defrost the fish in a pan of warm water. Just let it defrost slowly. Once it's defrosted, just rinse it and pat it nice and dry. Season it with salt and pepper, some fresh lemon juice, and a little bit of melted butter. Put it in a baking dish, put it in the oven, and let it roast for 10 minutes. It cooks fast because it's not really thick, right? You're going to add a splash of white wine. I use Pinot Grigio Santa Margherita, and some capers. Put it back in the oven, allow it to sit there for another 10 minutes, and then you can baste it kind of with the butter and the white wine that you've poured on it while it's cooking. When it's done, remove it, place it on your plate. One piece is really going to feed 2 people. It's a big, thick piece, right? I mean, not thick, but it's big. I served this on a bed of wild rice and roasted butternut squash and a large mixed salad. A chilled glass of the Pinot Grigio Santa Margherita is perfect to go with it. I'm sure if you try it, you will like it and you will thank me later. Look, it's Monday. The week has just begun. It's a gorgeous day here in South Florida, probably in the mid-70s. It's going to be like that hopefully all week. In any event, until tomorrow, take good care.